Hello everyone, welcome to Ask the Expert. Today we're delighted to have Eric Sprott with us. Eric is the chairman of Sprott Money Limited. He's also the CEO, CIO, and senior portfolio manager of Sprott Asset Management and the chairman of Sprott Inc. Eric, thank you for your time.
Jessica, happy to be here.
Okay, so we have gathered a few questions from our viewers. Let's start off with this question from Mr. Luca Carfa. His question is, at what point do you think will be the time to sell your gold and silver holdings, or will you sell? I've heard some say that they would use their holdings in the future for collateral to purchase real estate or other assets.
Well, I think the only reasons for selling gold are, one, you have a parabolic move in gold and silver and you realize that there's a mania happening, which there isn't happening today. Two, if you saw prudence in government and central bank management of the economy and the money supply, you might think that the game could end. And or if they made gold and silver legal tender, in which case if you had cash you could use it to convert it into silver and gold. Those would be the three circumstances where you might consider that. I don't think we're anywhere near that at this time in the cycle, so I haven't had to worry about that proposition, and I certainly don't think the time is now. So we'll deal with that probably 5 to 10 years from now.
Okay, thank you very much. Okay, next question is from Mr. Adrian DeHeer. He wants to know what about the possibility that the current news about Libor manipulation leads to an avalanche in which the gold price suppression is revealed. The names of the banks involved are the same as those mentioned by Gada. Could all this lead to the long-expected major event that triggers the collapse of the whole system?
Well, Libor is part of the banking phenomena that we've experienced. I mean, we've seen other situations where, for example, banks have been charged with charging storage fees on silver and gold that they haven't had, where they've misprocessed mortgage applications, where they're accused of rigging the power market. They're accused of rigging the silver market, which is a case that hasn't gone to court yet, but it's been filed. Whether Libor specifically causes the linkage to a gold price suppression scheme, I'm not certain. A lot of great work has been done by people other than me about suppression of the gold price, and I totally adhere to that work. But I can't suggest to anyone that there's going to be something that happens in the near future that would implicate anyone in this situation, even though I think it's been ongoing for a long, long time. I've always been a believer that the physical demand for gold and silver will overwhelm the paper markets, and with all that we see going on in the gold market these days, particularly with the immense Chinese buying, I don't think those days are far off when the physical markets will be challenged to supply the amount of gold that the buyers demand.
Okay. All right, thank you for the answer. So next question is from Mr. Alex Adiev. He wants to know, today the ECB cut interest rates and the Bank of England printed 50 billion. This is extremely bullish for precious metals, so why have the metals crashed on this news?
Well, it's probably a great question to ask for over the last 15 odd months since the price peaked out at over $1,920, because we've gone from one severe financial event to another severe financial event, but for some bizarre reason the price of gold and silver in the paper markets has gone down. I can't help but think that the reasons for people who own gold and silver manifest themselves and show themselves every day. And if anyone could explain to me why people in Europe wouldn't be buying more gold, people in Argentina, for example, who can't even get US dollars now, wouldn't be buying more gold. We know the Chinese are buying more gold. The Indians have been fairly consistent buyers, although I think it's a little weaker this year, probably more because of currency depreciation. But the fact is that the reason to own gold, both for an individual and for an investor, an institutional type investor, have changed markedly. So I mean, a lot of this I think you put down to the paper markets where they're mispricing the product, because the physical data, in my mind, is overwhelming. That demand already exceeds supply, and I suspect that the G6 central banks continue to sell their gold surreptitiously through the gold leasing market. And someday there will be a failure, whether it's at the COMEX or somebody demanding delivery, and I think things could get pretty wild after that.
Okay, thank you for your answer. Okay, moving on to the next question from Ms. Murray Luxon. The question is it possible that gold prices are manipulated by more than one source?
Well, I think that there's a lot of evidence that the G6 central banks don't like the gold price going up, and they particularly don't like the gold price going up when the crisis is at its peak, because the gold is the canary in the coal mine. So there is no overt proof of manipulation. There's many people who look at all kinds of data that, and myself included, I look at the physical data and I say, well, where's the physical gold coming from that these various entities are buying? And when I look at the difference in supply and demand from, let's say, 2000 to today, I have demand having gone up by about 60%, and supply is about the same. So where's the gold mine supply and recycling? So where's the gold coming from? And I personally suspect that the G6 central banks, who are trying to keep the world together, are supplying that gold to the physical market through leasing of gold from central banks.
Okay.